All right, so this is a short little video on how to use Fibonacci's in technical analysis. If you want a more in-depth video, you can click on my other videos in the link or check out the other videos on my channel. All right, so Fibonacci's, how do we use Fibonacci's? Why do we use it? We use them for determining retracements and structures and uptrends and downtrends, and then also to determine take profits and or stop losses. All right, so this is AUD. This is the only pair that I trade because trading is a game of probabilities and making decisions based on your emotions. So you want to make sure that your focus is possible, and that's why I only trade one pair. I've been trading this pair for probably over a year now, trading it 3 years in total. So this is my experience, and it's been working pretty well as far as the hit rate and win rate. So, all right, so retracements and structures. What do we use? How do we use Fibonacci to determine retracements and structures? Okay, all right. So let's single out a small section of this how to draw fibs in an uptrend. Okay, so we got a clear uptrend right here in this section of the market, right? Okay, so how do we draw the fibs? Bottom wick to top wick. Boom. What do we get on the smaller time frame? We get clear retracement hits TPs. All right, so the most important levels in Fibonacci are the negative 0.27, negative 0.444, negative 0.618. For take profits, these are take profits. For stop losses, we use these three lines right here, red, yellow, red. And then for retracements, I use all these lines in between here. Really, the main focus is, I would say, the 0.382, 0.236, 0.618 slash 0.559, and 0.786. So we get a clear 0.559 retracement, or some people say 0.618. I choose to say 0.559 because they're basically in the same area, and this is a better average between, because a lot of times it'll hit 0.5 or in between 0.5 and 0.618, and that's why I ended up making the 0.559 level on my Fibonacci. You can customize yours however you want, but based on my experience, it tends to hit the middle level right here. That's the golden fib level. So, boom, what do we get? Retracement in the 0.559 slash 0.618 level hits negative 0.27, clear hit of negative 0.27 and negative 0.444. And they even hit these levels. Now, this is a rare case because it usually doesn't hit 0.618 unless it's very, very strong buying or selling pressure. But it almost every single time, if you're right about the uptrend or downtrend, it'll hit a negative 0.27, and it'll basically almost hit every single time to 0.444. Now, this is a custom level that I made up and I picked up over the last few years because I wanted to maximize my profits. And what I realized is that it would always hit in between the negative 0.618 and negative 0.27. I started off using the negative 0.27, but because that's the standard Fibonacci level that everybody preaches, but what I realized is if I want to maximize profits and it's always going past it, then why don't I maximize it? And so now I always use the negative 0.444 level to use in my take profits, but you can use negative 0.27 or negative 0.444 based on your risk tolerance and how long you like to hold and all that and your preferences. I barely ever use these levels because it almost never hits these levels. But if I'm very confident in the trend and I feel like that is very strong, then I will use them. I usually don't though. So that's an uptrend example, right? Okay, let's look at a downtrend. All right, we got a sell right here, really strong sell. Top wick, bottom wick. What do we get? retracement to 0.618 to 0.786 level, so right around here. Sell off, goes through all the take profits, goes all the way down here. This is also a rare case because usually it's not this strong, but obviously the selling pressure here was so strong it just kept selling off and went past all these levels, and that's what happened. Okay, so let's look at another example. Boom, we got a big ass sell off right here, retracement sell off. Top wick to bottom wick, what do we get? Retracement to the 0.618 level, 0.559 level. We get a huge sell off all the way to the negative 0.27 level and almost exactly hits the negative 0.444 level. And that's what I'm talking about. And that's what I've realized over the past few years. It always comes down to this level. Now, for me, I would have put my take profit down here, but I would have kept an eye on my trade and checked on it every few hours or something like that, just to make sure that, you know, I don't get messed up when it comes to the take profit and it doesn't reverse on me. So maybe what I would have did is put partial profit here and then partial profit here, and then if I saw this retracement, this big candle, I would have gotten out right as it went back up, and then I would have been good. Or if you like to just forget about it, you could just do negative 0.27, but look how closely, almost exactly hits this level, and that's what I'm talking about when I use these Fibonacci levels. So that's an example for a sell-off or a downtrend. And that's just a quick video on how to use Fibonacci. If you want to watch something in more detail on every aspect of Fibonacci, you can click the link in the video. I mean, the link in the description, or you can check out my other videos.